Yes, Amit. We have now joining us Devang Mehta from Spark Capital. Devang, hi. What do you make of the market? We are we are moving in a very narrow range, and every time we are hitting 26,000, we see some kind of sell-off coming in.
Good afternoon, Sajid. I think, in fact, if you ask me, it is a lot better than what we saw in the better part of 2025 and the last bit of 2024, and in fact, January of 2026 as well. Because what we have seen in the last, I think, particularly around 15-20 days and those trading sessions post budget and post probably signing the US trade deal, or at least announcing the trade deal, is that the market breadth has improved. Right, the better part of 2025, you saw a stealth bear market where typically your Nifty components, a few 8 to 10 of your Nifty businesses or stocks and some of the Sensex stocks had probably held the benchmark at a certain level, very close to the kissing distance that it was to the lifetime highs. But the broader market painted a completely different picture, with the median fall being 28% in stocks which are above 1,000 crore in terms of market cap. So I think it was a carnage all around. But what we are observing is post this earnings season, I think there has been a marked improvement in the market breadth, be it mid cap, be it small cap, and particularly some of the quality stocks which were very beaten down over the last 1.5 year because of valuation correction, price correction, time correction. I think we are seeing a genuine bit of buying coming over there, and I think it's a lot better than what we are seeing, the combination of macros, micros, and sentiment what we saw during the last year. So I think it's a lot better. No complaints. Probably, I think we are somewhere very close to seeing a good, probably a good year going forward.
How do you, what do you suggest to investors, especially those, looking into the future, especially for a medium term? We had a good Q3 numbers coming in, but we haven't seen much of upgrades coming in from any of the analysts for many of the companies there. How do you see, firstly, how do you see the company's fundamentals earnings pick up from here on? And secondly, some of the valuations that these companies are trading in, especially financial services or for that matter, capital goods?
Yeah. I think, Sajid, a brilliant question again. So typically, we always believe that market is a slave of earnings, and so are the stock prices of their individual earning of those businesses. So my sense here is that we had a very, in hindsight, if I can say, the valuations were probably very high 1.5-2 years back. That got corrected. So valuation correction, time correction, price correction, as I mentioned in your first question. I think typically what we have seen this earnings season is either there is an improvement in the overall earnings trajectory. Some of these companies came up with very good set of numbers. Some of the companies which probably did not come up with good numbers or were in line or little bit not so great in terms of expectations also had good commentary. So I'll not paint the entire thing with the same brush, but most of the companies, we did a small analysis which shows that the typical large cap companies came up with around 12-13% types of earning growth on an average. Of course, the mid caps were around 18-19% type of earnings growth, and a lot of small cap companies which were sort of beaten down have come up with around 20-23% type of earnings growth. But what is important is the quality of earnings, whether there has been a bit of margin expansion. Yes, somewhere we have seen even that. Revenues, the top line growth was missing in the past quarters. It was only margin expansion or the operational efficiencies which came back in the past few quarters. But I think this quarter, the most important part was revenues and top lines came back. Maybe it is a GST impact, maybe a little bit of capex impact, which is now coming back. Private capex might be coming back. I think there's 2-3 factors. And credit growth, if I can mention that point, SBI briefly talked about that 13%, 14% type of credit growth. I think a combination of these has sort of given markets sort of a wherewithal that from here on, I think the earnings should improve. Yes, there has not been many upgrades in terms of earnings, but I think probably in the next 2-3 quarters, we would start seeing that as well.
IT, 15% down this month alone. How do you see IT from here on?
Very, very clear that IT, you have a scenario where if you are going to still willing to pay 18-20%, 18-20 P for a company which shows a constant currency growth of 1%, 2%, 3%, it is not simply going to be possible. Yes, from here on, after a huge correction, I think most of the companies are at multi-year lows. Some of this can have bounce backs to the tune of 10-15%. Can it happen? Can a technical bounce back, can a general be a dead cat bounce be on the cards? It can very well happen. But I think the most important is that how these companies adjusted in the past. They had their Y2K moments, they had their other moments. They probably wanted to digitalize their proceedings over the last 4-5 years. We also seen that as a threat. Now, how this collectively they cope up with the AI, which has now been presented, and right, we all know that what Anthropy has done and what other companies have done. Ideally, I think if these companies adopt the business model, they might lose a little bit of margin, they might lose a little bit of revenue on the way up. But how they cope up with is it's a monitorable. Honestly, if you ask me on my client portfolios, on our scheme, we generally avoided IT, large cap IT particularly. There are a couple of ER&D AI type of companies we still hold in the portfolio, but we have generally avoided the large cap IT space. And I probably don't want to edit sooner. We want probably the next couple of quarters how companies guide, and what is the trajectory of these companies in terms of their, at least the adoption of AI, and what they talk about it. That's more important rather than buying it and being a early bird over there.
Rajesh, hi, afternoon. Welcome to the show. Wondering what your thoughts are on IT, because this kind of volatility is quite gut-wrenching.
So we have seen, volatility is there in Nifty IT, as well as most of the large cap stocks are also witnessing the same kind of behavior. We have seen, sustained supply pressure at a higher level for most of the IT stocks. Still, I believe that, it may take time to recover, though we have seen a long time as well as price correction in this space. I think a lot of uncertainty is still there. In this fall, the important thing to note is the mid cap IT has also started correcting, and now broken their crucial support area also. So I think one should wait and watch at this juncture. I think when we may see further more downside in the most of the IT stocks. My advice would be avoid at this juncture. Let this supply pressure to settle down at certain level. Then one can focus on to buy IT stocks in general. But yes, some of the stocks like HCL Tech and Tech Mahindra, these two stocks are, if we look at the long-term structure is still intact. So I think if supply pressure settle down, so I think HCL and Tech Mahindra would be our preferred choice to buy in the decline.
Rajesh, can you also give us a sense of some of the private sector banks as well?
So private sector banks are still consolidating, but yes, the PSU banks are doing good, and here continuity of uptrend is there. From private sector bank, I think some of the bank where we are focusing at this juncture is RBL Bank, where we like the structure and the way stock is showing sign of strength. Here we may see some continuity of uptrend. Though stock has witnessed some profit taking at high level, but looking at the long term structure, I think there is a sign of strength on the short to medium term chart. So one can buy and accumulate this counter with a stop loss of 320 on the higher side. 345 to 360 would be the target. And from private sector bank, a mid cap bank like Federal Bank is also showing sign of strength. So one can focus on this stock. From large cap private sector bank, our choice would be ICICI Bank at this juncture. Stock is in consolidation, holding 20-day, 50-day moving average. So I think some more consolidation would be there. But yes, for investment point of view, if somebody is looking for private sector bank, I think ICICI would be the stock where price correction is already taken place and some consolidation would be there. But with stop loss of 1360, one can buy and accumulate on the higher side. Once stock manages to cross 1420, we could see a higher trajectory towards 1500.
Devang, what is your take for some of the PSU banks there? You have SBI, PNB, POB.
I think, Sajid, most of these companies have come up with good set of numbers, and two things which are very remarkable. The first thing being all these balance sheets are now sort of clean and lean. There have not been too many bad debts over the past 3-4 years. Some admirable work done by government and also these banks in not sort of hyping up sort of bad loans that we used to see earlier. So my sense that are they ready to lend more? Are they ready to be part of the credit growth phenomenon that we are going to experience over the future period? I think yes. Typically, the PSU banks, the valuations are still compelling for not all, but some of them are still compelling. And I think the last 3-4 years, if I leave alone 1.5 year, typically the banks have not performed well. So be it large cap, be it mid cap, or be it even PSU or private. So I think yes, financials look a little more in terms of attractiveness of valuation, a little bit better. And over there, yes, PSU banks look good. And I think most of these PSU banks have also ramped up their information technology systems, and they're also trying to compete and grab a bit of market share. There is enough and more for a lot of these players, where also India's financialization wave, the banking wave, is sort of getting in an up curve. So yes, I think there's a good opportunity for someone who wants to build a portfolio to get into, as I talked a little bit about capital goods or something like that. Yes, this will also be a proxy play towards one, capex, and second, savings and financialization. So I think yes, PSU banks look interesting, some of them.
I think that's the take coming in on PSU banks. But ABB India, that's the one which has really been running up today after reporting an inline set of numbers. In fact, let's hear out from the management as to what did they have to say about their future margin trajectory.
The private capex is are definitely able to put up its space in the market. So naturally, we see that demand will increase, and that will probably support better pricing going forward. So, long story short, I think our efforts are making sure that we need to sustain these margin corridors as what we are here today at 12% as what we see at the PAT levels. And going forward, depending upon how the demand plays out, I think our ability to price it out in the market also will go alongside.
Right, okay, that's the take coming in from the ABB management right now. But let's just take a look at what else has been happening in the market. While IT, of course, is the weak link right now. Names like KEI, Power India, etc., they're the ones which are perking up in trade. But Kunal, I just want to take stock of the two names that we were highlighting, past few days. That's ONGC as well as the other one being HDFC Life. And what patterns are you reading there now?
So both of them are still very attractive. ONGC, I think today also, I think the stock has gained another 0.5% to 1% at current levels. It's trading very close towards the next level of a breakout, which is about the 280 mark for ONGC. But I believe that with this robust chart pattern the stock has exhibited in the last few weeks, or in this last 2 months, particularly this quarter, indicates that the stock is coming out of a huge multi-quarter consolidation. So it looks attractive. And in terms of the target fronts, I would look at 300-ish as a near-term target for ONGC. Expectation is that the stock could continue to build on from where it left off in the previous month when the stock had shown a good recovery. So I think that's something which looks attractive. And from the other names also, I think you're looking at good recovery, which has come back into many of the other stocks. And if I have to pick maybe another PSU names, something like NTPC is also starting to look very attractive at 370 plus levels. So these are the few odd names which looks attractive.
Okay, India is on the right track to protect its sensitive sectors like agriculture. That's the word coming in from Commerce Minister Piyush Goyal on the sidelines of his briefing today. He adds that India and the US will be signing the trade deal by March, which will be operational by April. Prakash Priyadarshi, my colleague, is here to tell us more about what the minister had to say.
Well, that's an important development coming in, as the government has informed that a team led by Chief Negotiator will be heading to the United States on February 23rd to hold discussion with the US officials on the India-US trade deal. A very crucial development coming in. In fact, the team will stay there for next 4 or 5 days to hold discussion with the US official on finalizing legal framework of the deal. In fact, this is very important after a joint statement issued by both countries. In fact, the team will hold discussion on finalizing legal framework after joint statement. In fact, the joint statement will be converted into legal framework before signing mini deal. A very crucial development. Along with that, the Commerce Minister has also informed that they are expecting that the India-US trade deal to be operational by April this year. Along with that, they're also expecting that the notification related to implementing 18% US tariff to come into effect. In fact, that will be issued by the US administration by end of this month. A very crucial development coming in. Along with that, FTAs related to countries such as Oman and UK likely to be operational by April this year as well. In addition to that, the Commerce Minister has announced 7 new components under Export Promotion Council that will provide much needed support to the exporters amid the geopolitical complexities. This scheme has been announced by the, this scheme was announced by the Indian cabinet few months back. Now, the guidelines have been issued by the Commerce Minister, wherein financial incentives would be provided to the exporters, benefits related to interest subvention and financial support for export promotion will be provided to companies coming under micro and small enterprises. A very crucial development coming in, and we're expecting that with this kind of hand-holding, the exporters will get benefit.
Well, yes, critical indeed, and some interesting comments coming in from the Commerce Minister Piyush Goyal there. Just mapping what else has been holding out in the market. RVNL, of course, is one stock which has been looking good from the word go today. So that stock, of course, holding up. As we speak, some of the other names like an ABB, Power India, KEI, TI India, they are the ones which are also holding up well as we speak right now. Look at Godrej Properties. That's been quite the volatile chart, but holding out in the green so far at least. And Policy Bazaar is the other one, which has seen some good moves, about a 3.5% uptick on that stock as we speak right now. Rajesh, come in on the charts of, some of these realty names got quite battered right now as well in the market fall, have had a bad 2025 as well. But what next do you foresee on the charts for realty?
Yeah, most of the real estate stocks have corrected significantly in last couple of months. And looking at the structure, most of the stocks are now trading below to 20-day, 50-day moving average. So near-term structures are still weak for most of the stocks. If I have to select some stocks where, some sign of recovery we may see in the near-term perspective, so DLF would be our first choice, as stock has recovered from the lower level and now stock is trying to make some bottoming out sort of formation here, but still 650 would be the crucial level to watch for. If at all stock crosses 650, then yes, some short covering action we may see in this counter. And then on the lower side, now one needs to keep a strict stop loss of 605 if you're buying DLF at this juncture. If I go with other counter like Lodha is also showing sign of recovery from lower level. Stock is holding about 20-day, 50-day moving average. So this stock is also looking attractive at this juncture. On the lower side, 1020 needs to keep as a stop loss. If stock crosses above 1110, then yes, some upward momentum towards 1150, 1200 we may witness on the short to medium term perspective.
Rajesh, if you can also give us a sense of some of the cement stocks as well, where prices have been almost flat. What's your take on them?
From cement space, I think most of the stocks are now consolidating. But if I need to select some stock which are in uptrend, Ultratech is clear winning stock from this basket. And the way stock is moving in upsloping channel, I think Ultratech has potential to move beyond 13,000 level also. So for Ultratech, we hold our bullish view. Buy and accumulate would be the strategy here. On the downside, till stock is trading about 12,400 zone, I think any minor decline should be used as a buying opportunity. And once stock crosses about 12,900, I think the next target on the higher side would be around 13,500.
Okay, interesting. Well, at the AI Impact Summit currently underway, we also caught up with Sanjeev Bikhchandani on how AI is working to change the world of business and startups. Let's hear out a slice of what he told my colleague Samita Kare.
Almost every startup we meet now has got an element of AI in it. Some are AI first, but some just use AI for the value prop. So almost every investment that is made will now have AI in it.
Okay. So what about your company and the business that you're currently operating in, the kind of efficiencies that it's going to generate? Because what we've seen here at the expo area is that it's driving a lot of efficiencies, which essentially means that a lot of jobs will also be lost because those will be done by machines.
So we are doing a lot of work in AI. We are getting efficiencies, but we've not reduced any people. We're just doing more work. So the same number of people are doing more work. So I'll give you an example. We have 1.5 lakh clients, 1,30,000 clients, 1.5 lakh clients in Naukri. The top 20% we service with the field sales force. Next 30% we service the tele sales force. Okay. The bottom 50% nobody calls on because they're very small clients. Now those are being called by voice bots. So more work is being done using AI as opposed to downsizing people.
Yes. So what is deployment of AI within the companies, within the InfoEdge group of companies is going to look like?
So we're working on it. We've got about, I think, between about 130 AI engineers, 20 or 30 ML engineers. And they're continuously working on product innovation, making our search and match better, better customer service, better customer interfaces. So all that work is going on.
Right. So just one final question, and this is essentially on the India-US trade deal. Of course, we've just signed the Pax Silica also, and earlier in the deal, there was a section particularly with respect to India buying more of American technologies, including ICT products. How do you really see these developments, and who is gaining more in these? Are these truly complementary in nature?
So look, trade is usually almost always mutually beneficial. That's why it happens. Right? We gain something, that's why you buy their products. They gain something, that's why they buy our products. We have to see the fine print in the deal before we finally come to a conclusion. But I'm quite confident that it'll work out to both countries' mutual benefit.
All right. So thank you very much.
So, people talk about where is India going to buy $500 billion of American product.
Yes.
So look, let's see the fine print. If Venezuelan oil is included in American product and we import a bunch of Venezuelan oil, the 500 billion is easily achieved.
Okay, that's Sanjeev Bikhchandani talking about how life has at InfoEdge has been changed post the advent of AI. But still in conversation with Devang Mehta, Rajesh Palvia and Kunal Bothra and tracking the last lap of this week's trade. But Kunal, if you just had to, sort of assess the volatility that we've seen this week. We started off with resilience, the big crack yesterday and the little bit of a comeback, still haven't made up for all of yesterday's losses. What is it telling you about where the Nifty is going to head firstly?
It's very difficult to anticipate that, Aisha, because, it's the approach of the index. It's not just about levels, but I think it's the approach of the index within this 500-point band that's making it a lot more difficult to try and anticipate, heading towards 25,900 mark, 26,000 mark in a matter of 2 or 3 days. And that too on the back of some extremely strong recovery across sectors, across market breadth, and then immediately following it up with a 400-point kind of a drop, which you'd seen yesterday, and then coming back to that 25,400 mark on the verge of breaking that support. So I think it's the approach of the index towards these resistances and supports which is making, anticipating a trade a lot more difficult. And I think that's what one should probably try and not do this time around. Try and anticipate which side the markets would break out. You let the index, show signs of a confirmation of a breakout. The only good part which has been happening over the last many weeks of this new volatility for the indices is many sectors have started to open up. So, we were earlier looking at only, say, metals and PSU banking names. Now you have a space where the auto stocks have done very well. Cap good names have started to look very attractive. PSU stocks have started to come back into breakout modes for themselves. So the list is getting added up with respect to sectors and, stocks and themes. That is an extremely strong positive. But I think to ride the volatility, you have to ride out this phase, let the index show signs of a confirmation of a breakout above, say, 26,000 mark. That's what I would believe renewed momentum could probably come back.
Kunal, you're giving up some of the gains towards the end of the day. Do you think that it's one of the ways of, the rollover is one of the reasons why we are seeing this kind of volatility towards the end?
Yeah, it could be possible, and also I think a weekend effect. I think the traders would not want to carry on too much positions on the back of the expected geopolitical news flow. So yesterday's day was a big corrective right till the end. Today I think there was a reprieve from the start where you saw the index recovering. Bank Nifty I think at one point was almost 550, 600 points on the green. So we had recuperated the entire losses yesterday. So I'm sure that some kind of a profit booking of sorts would probably be seen into the indices, and traders would want to just about judge how markets open on Monday if in case there is any kind of a development across the globe.
And also we're seeing a good good rollover happening from the private banks, HDFC Bank, ICICI, Axis. The numbers are looking over 50% rollovers, which we have already seen in them, and in some cases it's basically some of the longs getting unwinded as well in some of the banks.
See, the interest is getting back into the private sector banking names slowly and gradually. I will not say into a very strong or quite a decisive manner. But then I think, for example, Axis Bank, which was a slight underperformer in the last 1 week, that stock has managed to make a comeback. Kotak Bank is back to above 400 levels. I think 400, 410 was the lower end of the trading range. It's come back towards 420, 425 kind of a band. HDFC Bank is the only stock which has been an underperformer. ICICI Bank has come back to that neutral point, 1400 levels, plus minus 5 odd points for itself. So there is a strong comeback which has been seen across few select large cap private sector banking names. But when you look at the mid cap end of the private sector banking stocks, the mix is a lot more stronger. Look at Bandhan Bank, the stock has recovered quite smartly from those 150, 55 to 170 plus mark where it's trading right now. AU Bank, RBL Bank, these stocks have seen a very good recovery. Add to the fact, Federal Bank, IDFC First Bank, even these stocks. So the mid-cap end of the private sector banking names, that's where there is some positive interest which has been developing, some decent trends which have emerged. The only nagging factor for the markets within the banking and across the larger cap domain has been the private sector banking names.
Devang, what's your outlook for the Nifty going into the expiry next week and maybe into the first week of March?
Honestly, not a short-term expert on Nifty, but what we see is that the trajectory of the market has probably changed. What we used to see earlier was normally people just coming to sell and sell. Here, I think over the last, as I say, 10, 15 sessions, what we have seen is that there is a bit of genuine buying which has emerged for a lot of beaten down stocks, and this beaten down stocks are so-called, in fact, quality in terms of I'll be market cap agnostic, but there are great opportunities in large cap, mid cap, and also certain small cap where numbers were good, where management commentary was positive, and I think here it's very clear that this company suffered because of the overall market complexion changing from being a sort of a buy on dips to a sell on rise type of a market over the last 1.5 years. Call it profit booking, call it PE rating, whatever. But I think probably I'm not talking about PE re-rating as such, but I think earnings, on the back of earnings, this company should probably do well. So my sense, yes, there are more positives than negatives. In a very simple language, the risk to reward is now positive on the reward side.
Right. Okay, Rajesh, Devang, both of you, thanks as always for joining in with your time. We let you go on that note. Just winding up on the week, and it's clearly the Nifty PSU Bank which has seen the maximum gains with a solid 5.5% of an uptick. Nifty Energy came next with some of the crude sensitives like ONGC and Oil India clearly contributing single-handedly to the move, while as it was the OMCs which were under pressure. Nifty Energy has managed to eke out about 2.5% in the green. Nifty FMCG as well did not do badly, 1.7% of a gain. And Nifty Bank with due contribution from PSU banks as well, a 1.6% traction, as did Nifty Pharma with a 1.25% gain. And then, of course, it was metals also which held out. What didn't look good, Nifty IT all the way. That was at the bottom of the heap with a 2% slide, and in fact a little bit more than that, adding to today's move. Nifty Auto as well was an underperformer, about 1.5% lower for the week gone by. And the Nifty Realty as well was down about less than 0.5% or so. While the Nifty mid and the small caps closed in absolutely flat, the Nifty 50 had at best just a meager 0.4% kind of gain. But winding out for the day, it's really been about Hindalco, L&T, Coal India, Bajaj Finance today, which have managed to, cushion the Nifty, so to speak. Tata Steel, BEL as well, along with ONGC and Asian Paints, had due contribution. And the broader markets as well looked quite okay, even though there was slight bit of an ease off towards the dying minutes of trade, but still we had good names like an ABB, Power India, a KEI, TI, as well as RVNL, which managed to hold out quite okay. But Kunal, of course, the question is, what next now? What happens when we come back to trade next week?
I think we should continue to trade in this range, 500 points. The only concern I think today for the markets today is the rise in India VIX, because it's not as though the India VIX has ebbed off. It's actually the India VIX which has risen, and that too devoid of any kind of a major event for in the markets as such. So that I believe could be a concerning point for the index over the near term. But I still believe that it's prudent enough to wait out for those levels to be breached for the next trends to emerge. 25,300 broadly as a support for the Nifty in the very short term, and 25,800 as a resistance.
Okay, on that note, let's wind it up for the week. It's a goodbye from Sajid and me, and of course, we'll see you with all the market action on Monday morning at 8 a.m.